Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Sebastian, Chief Operating Officer at Option Pit, to discuss trends that we're seeing in the Nasdaq 100 as well as VOLQ, the Nasdaq 100 Volatility Index. Mark, it's great to see you as always. Welcome back to Trade Talks. And here we are, Nasdaq 100 hits another intraday high on, Monday, July 12th. Seems to be that, index is kind of caught up over the past couple of weeks.
Yeah, the Nasdaq 100 has been a juggernaut. It's basically been holding up the other indexes, and really in the name of the mega caps. The move in Apple and Amazon in particular have both been astounding. We're heading into those major earnings though, so we're at a really important point for the Nasdaq 100 and many of the mega caps, as they've had such an incredible run over the last month. How good do these earnings need to be for them to continue this bull run?
So, Mark, are there any opportunities in terms of a trade in one of the volatility products, right? Because you had VOLQ and VIX actually last week at the same level. I think it was 1770, exact same level. And that's usually not the way it is. Typically, VOLQ is a little bit more elevated than VIX. Are there any trades that you're seeing within the volatility complex that traders could potentially capitalize on as we get into the thick of earnings seasons and the large cap growth names start reporting?
Yeah, I do think it's interesting that VOLQ has come off the way it is. It's not trading at much of a premium to the VIX index, partially because it's more concentrated on at-the-money fall, but also because I think traders are being a little bit sleepy around these tech earnings and what they could do coming out of VOLQ, and really how much volatility could ramp up as we head into the final week of July. That final week of July, I think we're going to see a nice bid up in VOLQ, and I would want to play in that direction.
So if you don't, you could do VOLQ by doing the VLQ on the CME group on the futures. If you don't have a futures account, what can you do if you're looking at whether it's index options or if you want to do something with the Qs? Would you hedge your portfolio in a certain way, or would you, buy some calls in an effort to take advantage of a pop and vol? What are you looking at?
Yeah, so an interesting trade, if I did for a non-futures account, would be some sort of triple Q straddle, which is long and at the money call, long and at the money put. Buy both of those, and then maybe sell some premium in some of the individual tech names. Another idea would be to buy that Q straddle and then sell a vol Q future to remove some of that volatility exposure and isolate the actual movement in QQQ. Because like I said, I do think there are some fireworks coming for the triple Q. Apple in particular worries me. It's been such a juggernaut running into its earnings. They're going to have to produce something that just absolutely floors everybody in order to continue this momentum higher.
And Mark, one last question for you here. We tell retail traders to take a look at straddles, even if you don't trade options, but to at least have a working knowledge of why options traders look at straddles. Explain to us what we can discern about potential moves in these stocks following the earnings print just by isolating the straddles information.
Yeah, so looking at the Apple earnings straddle, they're pricing in about a 6 or 7% move right now, which is not that big when you consider that it's moved twice that over the last couple of weeks. And the way we view straddles is it's really the market's best guess during earnings of how much it could move. So that Apple earnings week straddle is about $8 or $9. That's telling me that the market thinks an $8 or $9 move is about a 50-50 shot in Apple. I think that's probably a little too muted personally.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.